Newton's housing situation was less impressive. His apartment contained one bed, one desk, roughly 4,000 books, and a telescope that appeared to have been installed using violence. Unfortunately, he also had an upstairs neighbor. Gravity is sufficient. We do not require percussion. Then, a piece of ceiling landed in his tea, and he reached a perfectly rational scientific conclusion. He needed a house, a real house, a quiet house, preferably one where the ceiling remained attached to the building. So he opened a real estate website, and then he saw it. A beautiful American suburban home. 3 bedrooms, 2 bathrooms, a large kitchen, a private study big enough for his telescope, a peaceful backyard. And then the back door opened. There was an apple tree. It has chosen me. It's a tree you would not understand. For most buyers, the granite countertops probably would have helped. For Isaac Newton, the apple tree closed the deal. I shall purchase it. Then he saw the price, $434,100. $434,100. Correct. He checked his savings, then checked them again. He had $86,820. Coincidentally, almost exactly 20% of the purchase price. Excellent. Then I can afford 20% of the house. I shall take the kitchen, the study, and perhaps half a bathroom. That's not how it works. Apparently, America had developed another system. So he returned to a familiar place, the bank. Unfortunately, the bank was also familiar with him. You remember me. Oh, he remembered. The credit cards, the golden telescope, the diamond apple peeler, the powdered wigs, all 72 of them. I have become significantly more responsible, he said, while quietly pushing several shopping bags out of sight. If you haven't watched what happened between Newton and Banker, you have to recently episode of Newtonomics. Recently. There was, however, one advantage to returning to the same bank. Very little time was required for introductions. You provide part of the purchase price. The lender provides the rest. You will give me approximately $347,000 if you qualify. Why did no one tell me banks distribute money? We expect it back. Naturally. When? 30 years. 30 days? Years. He did what any great mathematician would do. He calculated his age, calculated 30 years, and drew a tiny coffin beside the final payment. Bold. You have incorporated mortality into the repayment schedule. It's a mortgage. A mortgage allows a buyer to purchase a home without paying the entire price up front. But borrowing hundreds of thousands of dollars introduces one very important detail. The money is not free. Now we discuss interest. I am extremely interested. Not that kind. Interest is essentially the cost of borrowing money. For our example, suppose he borrows $347,280 using a 30-year fixed mortgage at an illustrative rate of 6.69%. That is just an example rate for the calculation, not a universal mortgage rate. 6.69%? That's tiny. Please don't say that. At those numbers, the principal and interest payment would be roughly $2,239 per month. $2,239. I have solved housing. No, I dislike the speed with which you said that. Because he wasn't making one payment. He was potentially making 360 of them. 12 payments became 60. 60 became 120. 120 became 240. And eventually, 360. He requested the total. He was advised against it. I invented calculus. That is exactly why I'm concerned. He calculated, then calculated again, then used another calculator, then an abacus, then apparently tried turning the calculator upside down. The answer remained deeply offensive. He stood up, walked outside, returned, and sat down again. I have discovered an error. Where? Somewhere in this building. If this example mortgage remained unchanged for the full 30 years, the principal and interest payments would add up to roughly $800,000. A huge portion of that difference would be interest. He looked at the real house, then imagined another entire house made from the money spent on interest. Then I am paying enough money to imagine another house. That's not... Where is it? There is no second house. Then why can I see it? Now, this doesn't mean a mortgage is automatically a bad financial decision. It means time matters. A percentage that looks small can become an enormous amount when applied to hundreds of thousands of dollars. For decades, Time and I are no longer colleagues. Fine. Mortgage payment calculated. I have solved housing. He had not solved housing. He arrived at the home, received the key, and immediately met property taxes. Then homeowners insurance. Then possibly mortgage insurance, depending on the loan. Then an HOA notice. How many organizations own my house? And then the plumbing introduced itself. That's going to cost. Do not complete that sentence. The principal and interest payment is not necessarily the complete monthly cost of owning a home. Taxes matter. Insurance matters. Utilities matter. Maintenance matters. And when something breaks, there is no landlord to call. Because congratulations, you are the landlord. I have unsolved housing.
Fine. I understand the mortgage. I understand the taxes. I understand the insurance. I shall proceed. There may be another problem. What sort of problem? Your credit history. That. The credit card experiment had returned. High balances, multiple applications, past payment problems, and enough luxury purchases to make an 18th century king uncomfortable. You financed 72 powdered wigs. Fashion requires redundancy. You applied for multiple cards. Diversification. You carried high balances. Advanced diversification. The lender isn't deciding whether you're intelligent. They're deciding whether lending you hundreds of thousands of dollars fits their requirements. Mortgage lenders may examine things such as credit history, income, employment, assets, existing debt, and the size of the housing payment being requested. I assume discovering gravity has no effect? None. Remarkable. That evening, he returned to the house. But this time, he stood outside the fence. The lights were on. Another couple was being shown around inside. The study was still there. The backyard was still there. And so was the apple tree. But he didn't have the key. For the first time, his old financial mistakes weren't just numbers printed on a statement. They were standing between him and something he actually wanted. He sat beneath the apple tree and looked at the credit card that had caused so much trouble. 14 telescopes? Why did I require 14 telescopes? I have 2 eyes. Then, an apple fell beside him. And he did what he always does when reality becomes inconvenient. He started calculating. But this time, he didn't calculate how much the bank might lend him. He calculated how much house he could actually afford. How much house can I purchase without making the remainder of my life financially ridiculous? He listed his income, his existing debts, the expected mortgage, property taxes, insurance, maintenance, and the emergency savings he would still have after closing. For the first time, he separated 2 very different ideas. Approval is not the same thing as affordability. That was surprisingly responsible. Please do not interrupt my character development. He started eliminating expenses. The golden carriage, another telescope, several unnecessary luxury purchases. And then, the most painful sacrifice of all, the premium powdered wig subscription. Science demands sacrifice. No scientist had ever looked more devastated. You compare how much I earn with how much of that income is already committed to recurring debt. That's part of it. One measurement lenders may use is called the debt-to-income ratio. The exact underwriting rules can differ between lenders and loan programs, but the basic idea is simple. If a large portion of your monthly income is already going toward debt, adding a large mortgage becomes harder. He placed his income on one side of a scale, then added his debt to the other. Credit cards, carriage financing, telescopes, wigs. The debt side collapsed. So the golden carriage did not help? No. The diamond apple peeler? No. The 72, please stop mentioning the wigs. I have discovered a 4th law of motion. You have not. He also realized he didn't necessarily have to accept the first mortgage offer placed in front of him. Different lenders can offer different rates, fees, loan structures, and closing costs. So he did what a scientist should do. He compared them. Interest rate, fees, loan term, total cost. Do you accept apples? The final question remained unsuccessful, but the others mattered. He compared the offers. One had a lower rate but higher upfront costs. Another had different fees. Another had different terms. And eventually, he understood something important. There is no universal best. There is only the option that best fits the borrower's circumstances. Correct. I have defeated banking. No, you could have allowed me 3 seconds. Then he considered the loan term.
A shorter mortgage term can mean a much larger required monthly principal and interest payment, but potentially much less interest over time. A longer term may reduce that monthly payment, but keeps the debt around much longer. He imagined two roads. One was steep, but short. The other was easier, and seemed to continue toward another geological era. So one attacks the wallet aggressively, the other with patience. Financial professionals do not usually describe mortgages like predators, a failure of imagination. Eventually, he had something he didn't have when he first saw the house: a plan. He had a reasonable down payment, emergency savings kept separately, less expensive debt, a mortgage offer he actually understood, estimated taxes and insurance, and room in the budget for the inevitable moment when the house decided to break something. You could put more money down. Then I would own more house and possess less ability to survive the house. You're learning. I am uncomfortable with it. The key was finally held out to him. This time, he didn't immediately take it. Mortgage understood? Yes. Taxes planned? Yes. Insurance? Yes. Emergency savings? Still there. He smiled and finally took the key. He moved into the house. His telescope finally had room. His books finally had shelves. His ceiling no longer contained a drummer. And in the backyard, his apple tree was waiting. One apple fell beside him. At least gravity remains free. Then came the property tax notice. Then the insurance bill. Then the HOA notice. Then the utility bill. Then another bill. And another. And another. Within seconds, Isaac Newton had disappeared beneath the administrative side of homeownership. I have reconsidered the American dream. And that was the real discovery. Buying a home isn't only about whether the bank approves the mortgage. The purchase price matters. The down payment matters. The interest rate matters. The loan term matters. Taxes and insurance matter. Existing debt matters. Maintenance matters. Emergency savings matter. And most importantly, your life after making the payment matters. He looked at the house, then the mortgage, then his remaining savings. So the question was never, can I buy this house? The real question is, can I buy this house and still afford to live? Precisely. I have solved housing. So, about the repair estimate? End of the video. I have spent far too much money paying banks, mortgage interest, credit cards, fees, bills. So, I have identified the obvious solution. Back at the bank. You again. How much? How much what? The bank. The entire bank? Precisely. Somehow, this was the result. A bank vault, a set of keys, and one extremely confident new owner. At last. For months, I have been paying interest. Now, I am on the correct side of it. Isaac Newton bought a bank. Big mistake.
Please subscribe.